Hey everyone, welcome back to Corporate Decoder. Today we are diving into a report from Ring Energy. It's about an acquisition, which is like buying another company. It sounds simple, but trust me, there are more layers than an onion, and some of those layers will make you cry. This report is from March 31, 2025, and it's called an 8K. This is basically a quick update that companies file to let investors know about big changes. This one is about Ring Energy buying some oil and gas stuff from a company called Lime Rock. Ring Energy, a company that drills for oil and gas, bought some land and equipment from Lime Rock Resources. Think of it like buying a used car. But instead of a car, it's oil wells in Texas. The deal closed at the end of March. They paid about $68.6 million in cash. They also owe another $10 million towards the end of the year. Plus, they gave Lime Rock a bunch of shares in Ring Energy stock. Stocks are like pieces of ownership in the company. Now, because Lime Rock got a whole lot of Ring Energy stock, they want to be able to sell it to make money. So Ring Energy is promising to help them do that. They signed a registration rights agreement. This means Ring Energy will file paperwork with the government, the SEC, so that Lime Rock can sell their shares to the public. They have to do this pretty quickly, either by the end of April or soon after they send out their invitation for the yearly shareholder meeting, basically stockholders. Ring Energy needs to make sure this registration goes through and stays active, so Lime Rock can sell those shares. This agreement lasts until either Lime Rock sells all their shares or holds less than 1% of the company's stock, or until 2 years have passed since the deal closed. So to recap, Ring Energy officially closed the deal to buy those oil and gas properties from Lime Rock. They paid about $68.6 million in cash initially, will pay another $10 million later, and gave Lime Rock over 6 million shares of Ring Energy stock. Because Ring Energy gave Lime Rock all those shares, they needed to make sure it was okay with the rules. They're saying they followed a rule called Section 4(2), which allows them to issue stock without registering it with the SEC. They basically said they checked with Lime Rock to make sure they understood the risks and were allowed to receive the shares without the usual registration process. The company put out a press release, basically an announcement to the public, saying that the deal with Lime Rock was done. This is to make sure everyone has the same information. It's not considered officially filed with the SEC in the same way as the rest of this report, meaning it's not held to quite the same legal standard. Also, the company isn't admitting that anything in the press release is super important just by including it here. Ring Energy includes a warning about forward-looking statements. These are basically predictions about the future. They say things like how much oil they expect to produce and how much money they'll make. But they also warn that things might not go as planned. There are risks like oil prices dropping, problems with drilling, bad weather, and changes in government rules. They say they're not promising to update these predictions unless they have to by law. You can find the actual agreement where Ring Energy agreed to buy Lime Rock stuff as an exhibit. Also the agreement about Lime Rock being able to sell their shares of Ring Energy. And finally the press release where they announced the deal closed. Now, let's step back and look at the big picture. Ring Energy is betting that these new oil wells will be a good investment. Buying another company's assets is a risky move. If oil prices drop or the wells don't produce as much as they expect, they could lose money. They're also taking on more debt which they have to pay back, which can be dangerous if they have a bad year. But if everything goes well, Ring Energy could make a lot more money and grow their business. It's like planting a seed. It could grow into a tree that bears fruit, or it could wither and die. One thing to keep in mind is that Ring Energy gave Lime Rock a lot of their own stock as part of the deal. This means that existing shareholders of Ring Energy now own a slightly smaller piece of the company. It's like cutting a pie into more slices. Each slice is smaller. Overall, this acquisition is a significant step for Ring Energy. It's a bet on the future of oil production in Texas. It could pay off big, but it also comes with risks. So what's the final verdict? Ring Energy is making a bold move to grow their business. The success of this acquisition will depend on many things, including oil prices, drilling success, and their ability to manage debt. It is all a gamble. Thanks for watching. If you found this helpful, please like, comment, and subscribe for more corporate decoder videos.